All right, Dan, let's turn our attention to the biggest cruise operators, the biggest of which we'll start with first. That's none other than Carnival, and that's ticker symbol CCL. Dan, from a high-level perspective, how's Carnival doing?
So, as we talked about a little bit before, they're doing very well, but they're sort of using a cautious optimism. So booking numbers are up, revenue numbers are up. Everything is sort of going along swimmingly, with the minor exception of having to revise down a little bit for fuel prices and the loss of Cuba. But when they talk, the company does not want to sort of say like everything is great, because it's very fragile. If you look at the fact that they're committed to, I want to say 19 new ships. Let me look down and make sure that's true. Yeah, 19 new ships by 2025. That's a lot of added capacity. It's a lot of new markets. So it doesn't take that much for that to sort of fall apart. And they did slightly bring down their full year revenue, but it's still very robust, and bookings are tracking ahead of the previous year. So it's smooth sailing ahead, but you never know when a storm is going to come up.
Truly never know when a storm is going to come up. I know they've also had to deal with some headwinds in the European front. You've got Brexit, concerns in Italy. It sounds like all in all, though, that basically Carnival knows that there's going to be some short-term headwinds, but that's not stopping them from really investing into their fleet and continuing to build out just the massive amount of ships that they have under their banner.
Yeah, so in addition to building 19 new ships, they've also done some major renovations. The ship I'm actually going to be on in December, they've done so much to it, a multi-$100 million renovation, that they're changing its name. And why is this important? Because Carnival makes about 75% of its revenue from you buying a ticket. The other 25% comes from onboard revenue. Royal Caribbean, it's closer to 50-50. So if you're Carnival and you can redo your ship to add more for-fee restaurants, more experiences that cost money, more shopping opportunities, another place to play bingo that they charge you $20 and keep about half the revenue compared to the prizes. The more they can add that's going to entice you to spend money, and they're also adding free venues as well and experiences that don't cost money, but the more they can get you to spend, they can keep the same amount of passengers and up their profit. I don't know what the profit is when you buy a $7 Starbucks drink on a Royal Caribbean ship, but I'm going to guess it's very, very high compared to just drinking the free coffee that's included. So all of this investment is about generally having the bigger ships that wow people, that generally sell for the highest prices because people want to try all the new stuff, and targeting certain markets. Some of the European ports cannot take a 6,000 person mega ship, so you need a 2,200 person capacity ship that still has a lot of the bells and whistles and ways to make revenue. And that's sort of how Carnival, and to a similar extent Royal Caribbean, are engineering their fleets. It's a huge investment, and it's kind of that Amazon model where it pushes off some of their profits because they continually have to invest. As if Carnival adds, this experience, then Royal has to add that one. You're seeing it with like the Broadway style shows instead of the old school like musical production numbers, the standalone comedy venues. It's very much an arms race where people say, well, what am I going to get for free? And you mentioned Disney earlier. Well, you pay double to triple the price, but you're getting Disney entertainment and everything is sort of included. So there is a lot of financial pressure to be bigger and better.